Okay, hello everyone. Welcome to Crypto News and Investigative Reports. I'm glad that you're able to join us today. I want to say that I am not a financial advisor, and so please use this as an educational opportunity or just a conversational piece between you and your friends regarding some cryptocurrency. So I'm not a financial advisor, and and with that, we're going to get started today. Um, Thank you for watching. The first thing I'd like to talk about, if anybody is watching any of my videos, I'm following the money. I call it follow the money. It was kind of like Carl Bernstein and Bob Woodward when they were following the Nixon administration. They had a guy that was giving them information named Deep Throat, and they was following the money. So what I try to do on my videos is follow the International Monetary Fund, the World Bank, central banks, and the Federal Reserve. And so on the onset, that's kind of my priority is that helps me to follow the movement of cryptocurrency, because cryptocurrency is a digital asset, and for all intents and purposes, it is a money, so to speak. It is a valued a digital assets contain value, and you are going to be able to buy and sell with them. So, with that being said, let's get started. And then I want to say, please follow me on Twitter. We're Crypto News and Investigative Reports on Twitter, and we're also on YouTube. Please hit the subscribe button and subscribe to our videos, and please leave your comments about anything that I'm saying. I'd like to get your comments what you think about what I'm saying. So let's take a look at the market today. The Bitcoin is at $114 billion currently, and it is 6:40 Pacific Standard Time. Ethereum is at $29 billion. That's quite a bit. And Ripple XRP is at $13 billion. Of course, Bitcoin is still holding. This is a live coin watch, and it's a 51% dominance. Bitcoin is still holding a 51% dominance. And Ethereum, like I said, is at $29 billion. XRP is at $13 billion, and it's at 34 cents. It's holding. It seems like there was a resistance there, and it's kind of holding at above 30 cents for the last few days. Bitcoin Cash is at $9 billion, and rounding out the top five is EOS is at $4 billion. And the total market cap is like $218 billion right now, and this is Live Coin Watch. So cryptocurrency is here. It's here to stay, and it's really moving quite well. And there was a lot of other things that are going on that are great news for cryptocurrency. But I want to kind of get back to what my primary research information is, and I want to first start by going to the IMF, and it's the International Monetary Fund. And I was reading this article here from the IMF. It says "Going Cashless," and it's this guy Stefan. I can't pronounce his last name. But it's a very interesting article, and he is the governor of the world's oldest central bank, discussing his country's shift towards digital money. And, the central bank, the rumor had it that central banks were owned by the Rothschilds. That was actually a rumor. It was like, I think after the Civil War or something like that, a long time ago. The central banks, the Rothschilds did not own the central banks anymore. Central banks are owned regionally, but I'm still not able to pinpoint who exactly owns the central bank. But it's supposed to be a group of people, or I think the word is consortium, or a group of people that own the central banks. But one thing I'll say is that it is the central banks are very important to cryptocurrency. If cryptocurrency is going to dominate the financial markets, it's going to have to, the central banks are going to have to be a part of that, and they're not going to be able to do it without the central banks. And the IMF is not a bank. The International Monetary Fund is exactly what it says. It's a fund. It's not a bank. So the International Monetary Fund, they have a governing body that they deal with political part of the world monetary system, and they deal with a regulatory part of the world monetary system. So the IMF is not a bank; it's a fund, but they do work in conjunction with central banks. All right. So the IMF is not a bank. So the IMF, quote unquote, is not banking per se. Central banks are in conjunction with the IMF, along with the World Bank. All right. And so with that being said, this article right here, the governor of the world's oldest central bank discusses his country's shift towards digital money. And like I said in a few of my previous videos, is that they're all going to have to come to some kind of an agreement. The International Monetary Fund, the central bank, and the Federal Reserve, they're all going to have to work together in order or some kind of way. I don't know if they're all going to be on the same page, especially because of the news that we're getting from central banks. The news that we're getting from central banks, they're starting to say that, well, I'll just read it. Let's read. Let's see what central banks are saying. All right, so here's the first article. This guy, he is the governor of the world's oldest central bank, discussing his country's shift towards digital money and the digital solutions for large payments between banks have existed for some time. The novelty is that they have filtered down to individuals making small payments. And I'm going to go to, let's stop right here. In Sweden, clearing and transfers between accounts are concentrated in one system. Once the payments market infrastructure is in place, the marginal cost for payments are low and positive externalities are presented. What do we mean by positive externalities? A classic example is the telephone. Having the first telephone was not very valuable, as there would be no one to call. So if you had the first phone, if you're the only one who had a phone, it wouldn't be that valuable because ain't nobody to call. However, as more people eventually connected to the telephone network, the value of the phone increased. And so they're really leaning towards, as the central banks, creating their own cryptocurrencies. Now, with that being said, that puts it in the central banks in a very peculiar position. It's like either they're going to create their own cryptocurrency, or they're not going to create a cryptocurrency, or they're going to select a cryptocurrency or something that's already tested and tried, like a Ripple XRP, and use that, or they'll select something like a Ripple RXP and use their own cryptocurrency and use XRP as an intermediary. So there's a lot of variables that are happening with central banks. At this particular stage of the game, we don't really know what's going on. We don't know if they're going to do that, because the central banks are sending mixed signals. What do they want to do? And recently we've been watching like a cryptocurrency like a Ripple XRP. They've been coming out with, xrp is coming out of beta, and it's going to be used, but it's primarily right now looks like it's being used for more payment providers like MoneyGram and Western Union and those type of like Visa, those payment providers. And so we're still having, I still haven't seen a central bank that's going to, well, I haven't seen any news that a central bank has accepted Ripple XRP. If I'm wrong, please let me know what central bank is going to use Ripple XRP. But as we continue with this article, I think it's really interesting. Right here it says, in banknotes and coins, if banknotes and coins have their day, then in the future, the general public will no longer have access to a state guaranteed means of payment. The private sector will to a greater extent control accessibility. Technological developments and pricing of the available payment methods. It is difficult to say at present what consequences this might have, but it will likely further limit financial access for groups in society that currently lack any means of payment other than cash. Competition and redundancy in the payment infrastructure will likely be reduced if the state is no longer a participant. Today, cash has a natural place as the only legal tender. But in a case but in a cashless society, what would legal tender mean? And so let me read a little bit more. He says, in this regard, one might ask whether central banks should start issuing digital currency to the public. Did you check that out? I want to read that again. It says, that's the point I wanted to bring out. It says, in this regard, one might ask whether central banks should start issuing digital currency to the public. This is a complex issue and one central banks will likely struggle with for years to come. So this particular article is leaning towards central banks developing their own cryptocurrency. And so if central banks develop their own cryptocurrency, that's going to cause a problem for commercial banks. And so commercial banks are your Wells Fargo, your Bank of America, your Chase. They're going to have issues. They're going to have problems because if central banks create their own cryptocurrencies, then the cryptocurrency will the payment will go directly to the central bank, bypassing the commercial banks. So there is a big problem here. I see that I'm saying that there's a huge problem between the International Monetary Fund, the World Bank, and the central bank, and the commercial banking, because the central banks lend money to the commercial banks. And so with that being said, you know, commercial banks, the central banks are more involved with, the commercial banks are more involved with giving you loans on the house, second mortgage loans, first mortgage loans, giving you money to buy a car, giving you money for your, education, or, starting your own business. That's what commercial banks do for us as customers. The central bank lends that money to with the prime lending rate. They lend that money to the commercial banks. And so if the central banks are going to create their own cryptocurrency, that's going to cause a problem for the commercial bank. Central bank has their own cryptocurrency, problem for commercial bank. Central banks are all over the world, all different regional areas, cause a problem for commercial banks. So if we're going to have some kind of adoption regarding a cryptocurrency, that causes much more confusion if the central banks are going to be creating their own cryptocurrency. All right. And so let me continue on. This is a very good article. It says, in an approach to the question as a practical, not a hypothetical matter, I am convinced that within 10 years, we will almost exclusively be paying digitally, both in Sweden and in many parts of the world. Even today, young people, at least in Sweden, use particularly no cash at all. This demographic dimension is also why I believe that cash decline can be neither stopped nor reversed. While the Nordic countries are at the forefront, we are not alone. It is interesting to see how quickly the Chinese payment market, for instance, is changing. This is a very good article. I don't want to read the whole thing, but if you get the time, go back and read what this going cashless, the point of view, because the IMF is on board with cryptocurrency, but the problem is the central banks doesn't seem to be on board with cryptocurrency like the IMF is is starting to be on board with cryptocurrency. I could read, this is a very good article. And so to sum this article up, this article is saying it's a possibility that Sweden's central bank could issue their own cryptocurrency because they don't want to be taken out of the game. Because if the central banks don't create their own cryptocurrencies, then, like I said, it's a possibility they could be taken out of the game, and they don't want to get taken out of the game. All right. So let's move here to. I don't want it to go too long. Let's go to the second. The second one was why central banks could mint their own digital currency. Here's another article, and here's 3 bullet points of why. It says only 8% right here. Only 8% of the global financial transactions today involve cash, but that figure will diminish even further as digital currencies gain prominence. It says, faced with the growth of cryptocurrencies such as Bitcoin, central banks around the world will continue their research into introducing their own digital currencies. You see that? It says right here, it says, faced with the growth of cryptocurrencies such as Bitcoin, central banks around the world will continue to research into introducing their own digital currencies. This was March 28th, 2018. This was March. It says, and the third bullet point says, by entering the market for cryptocurrencies, central banks could pose a profound threat to the commercial banking business model. Now that's really big, guys, because as you continue to go through this article, what this article is actually saying is that you won't even be paying any commercial banks anymore. You won't be paying Chase Manhattan. You won't be paying Bank of America. You won't be paying Wells Fargo. You will be paying directly the digital currency. If as you read this, the digital currency will be going directly from you to the central bank. Okay, and so this is a very interesting problem. And I don't know, like I said on one of my previous videos, I don't know who that guy is that's trying to bring the central banks on board, but he has a real serious job. And I'm still looking for a central bank that's already selecting a cryptocurrency that's already out there, like a Bitcoin, like a Litecoin, like an Ethereum, like a Ripple XRP. Most of the central banks are thinking about, as you see in this article, most of the central banks are thinking about making their own cryptocurrency. So if you're going to get adoption or even mass adoption or anything close to that, it doesn't seem like it's going to be starting with the central banks. Maybe it might be starting with your payment providers. I saw that MoneyGram is your payment provider. American Express is a payment provider. Western Union is a payment provider. Those businesses that are making payments, maybe that's where it starts. And I could be wrong here, but maybe along with the infusion of a Ripple XRP in these payment providers and in these small banks or small payments, maybe that can urge on the larger banking industry to accept Ripple XRP. That's a possibility, or to accept a Bitcoin, or to accept an Ethereum. I mean, I don't know. I'm just giving you the limited information that I receive, and that's what I'm able to become analytical on. But nevertheless, when central banks could, why central banks could mint their own digital currencies. So this is a very good article. You should go back and read it. I'll read this. The big picture. It says the decline of cash and the rise of private currencies such as Bitcoin are driving central banks around the world to consider issuing their own digital currencies for the first time. The development could transform the global monetary system and create new risk for the banking sector. Like I said, you know, the IMF is not a bank. The IMF is a fund. It's the International Monetary Fund. So of course they can be on board with any regulation or any political position. They can take a political position and they can take a regulatory position, but they're not a bank. It's the central banks that are central to the world regarding money being spread all over the world. You know, but central banks have a lot to consider. Central banks have to consider labor. Central banks have to consider inflation. Central banks have to consider unemployment. Central bank have to consider destabilization in the market, the banking industry, stabilization in the banking industry. Central banks have a lot to consider. Central banks are regional. So this is the important element of, you know, the world moving to a mass, a cryptocurrency, one cryptocurrency. So it's a very integral, a very complex a thing altogether. Now let's move a little bit more over it. This is when was this? This was today. Thai central banks defends cryptocurrencies. Now, one of the things that you notice about regional, and this is the point I want to bring out. Regional central banks are more inclined to accept cryptocurrencies where there is poverty, where there is high unemployment, where there's high inflation, where there's high labor low, when nobody, there's high unemployment. Okay, so like Thailand, they're interested in working and developing a cryptocurrency as well. Um, and let me see, boom. It says the current high-profile fraud case involving over 5,564 Bitcoin has received much attention in the media. Blah, 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 blah. All right, here we go. It says the money is used for the wrong purpose. It is not a fraud that occurred during crypto trading. You know, this is kind of one of the issues. This article is more of an issue about developing your own cryptocurrency. That's what the central bank. That's what this article is about, and it came out today. We kind of just took it in, but this is one of the issues about creating your own cryptocurrency, like Venezuela. Venezuela, if you pull that up, Venezuela is having a problem, just like Thailand is having a problem developing their central bank is having a problem developing their own cryptocurrency. So now the question becomes, if what is the purpose of the central bank in a region developing their cryptocurrency for? Sweden doesn't have the same problems as Thailand. Thailand and Sweden don't have the same problems as Venezuela. Now Venezuela's cryptocurrency, they're saying it's for anti-money laundering, and so Venezuela's having a big problem trying to develop the petro, and they're trying to tie the petro cryptocurrency of Venezuela to their the Venezuela currency. I think it's the Bolivia or something like that. They're trying to tie their cryptocurrency to it. So you're looking at a real big issue with central banks. We see a real big problem. We're having a real big problem with central banks. The central banks are really having some issues. They've got to try to figure out which way they're going to go. Like I said, I'll repeat it. Are they going to make their own? Are they not going to do it? Are they going to select something already going? It's very difficult at this particular. Digital currencies are really disrupting central banks right now. All right. So let me move on to the last and final thing. Is this right here? Now, this is a meeting that was in March 2018, because this was really big in March. This is called the CPMI papers, and the CPMI is the Committee on Payments and it's the Committee on Payments and Market Infrastructure, CPMI, and the Markets Committee. Now, look, I got to read this to you, and you should go back and check this video out, this YouTube video. It's just an analog. It's just all, it's all talking. There's no video. It's just a recording. But it says central banks must carefully weigh the implications of financial stability and monetary policy of issuing digital currencies. According to the report from the CPMI and the Markets Committee, it says the report considers a wholesale CBD. Now this is really important. Listen to this. It says the report considers a wholesale CBDC, and that is that's a central bank digital currency. I'm sorry, I had my mind slipped right on there. A central bank digital currency for use of financial markets. That's what they're saying. They say that the central banks could make a central bank digital currency for use in the financial markets, and a general purpose central bank digital currency for use by the general public. What? What is that? So the central banks will issue two types. This is suggesting that the central bank will issue two types of cryptocurrency. They'll issue one type of cryptocurrency for the financial markets, and then they'll issue another type of cryptocurrency just for the general public. And this is why. For the general public, and their implications for payments, monetary policy, and financial stability. It finds that wholesale CBDCs might be useful for payments, but more work is needed to assess the full potential. Although a CBDC would not alter the basic mechanisms, the basic mechanics of a monetary policy implementation, its transmission could be affected. And here you go. A general purpose CBDC could have a wide-ranging implications for banks and financial systems. Commercial banks' reliance on customer deposits may become less stable. Listen to that. As deposits could more easily take flight to the central bank in times of stress. Wow. That's actually saying that instead of putting your money in the commercial bank, your digital currency will go straight to the central bank. Okay? Not your Wells Fargo, not your Bank of America, not your Chase Manhattan Bank, wherever your bank is. Your money will go your digital currency with the CBDC will go straight to the central bank. That's what this is saying. You might want to listen to this video. It's very heavy, very heavy. Besides consequences for financial stability, effects on the efficiency of financial intermediation needed to be carefully considered. The report concludes that each jurisdiction considering the launch of a CBDC should carefully and thoughtfully consider the implications before making the decision. You really want to go and listen to what this central bank meeting was all about. All right. So to sum this up, again, I'm talking about the International Monetary Fund, the central banks, and the Federal Reserve. My point being today that the central banks are thinking about making their own cryptocurrency. And the information that we're getting, central banks are starting to say, you know what, we might not even need commercial banks if we're going to go to a digital currency. That's big news, guys. If you're going to go directly to a digital currency and remove your little, the little banks, then I don't know. I mean, it's a very interesting thing. So from this information that we got today, we talked a little bit about Sweden and going cashless, and they're thinking about making their own digital currency as they're considering that. And then we talked about why central banks could mint their own digital currency. And then we went to, we talked about Thailand that's defending a cryptocurrency because some smaller central banks probably can join in and with a cryptocurrency that's already going and pull them out of debt, And then we talked about this particular piece of information right here, which is the bomb. The central bank must carefully weigh implications for financial stability and their monetary policy of issuing a digital currency. And so, the thing about central banks issuing, one more thing, the thing about central banks issuing their own digital currency is that it can cause market instability because how many central banks are there? And really, to be honest with you, when I first started following Ripple XRP, I kind of thought, oh, wow, the banks could all use Ripple XRP. It's Xcurrent, Xrapid, Xvia, Xspring, Consensus. It's not mined. The distributed ledger, interledger protocol. I mean, I thought, hey, that'd be the great thing for banks. Not understanding that the central banks has specific issues that relate directly to them, number one. And then number two, I didn't take into consideration the labor cost, inflation, unemployment, and the unbanked. Because that's actually the prize of cryptocurrency is to be able to reach the unbanked. And the unbanked is like $420 million. I mean, I think it's $29 million that leaves between the United States and Mexico. And then another $50 million that leaves between Mexico, the United States and the Philippines. So, we're talking some huge amounts of dollars here. And we're talking about the central banks being in the crosshairs. They are in a very peculiar position of having to figure out how to go forward because of digital assets. All right? All right, guys. If you, please subscribe to Crypto News and Investigative Reports. We're going to stay on top of this story and try to continue to bring you, the most current information that we can get. I'd like to hear what you think about the position of the central banks and what position that the central banks are in. And I'd like to also hear what you think about your payment not going to your regular Bank of America or Bank of Thailand or wherever you bank and goes directly to the central bank. I'd like to hear what your comments are about that. And then maybe you might want to dig and find out some information and you might want to make that comment. Let's keep the conversation going. Once again, thank you everybody for watching. I am not a financial advisor. We're just trying to do our best to give you the best information that we can. All right, so wherever you are, have a good day, or if it's night, wherever you are, have a good night, and we'll talk to you again